Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. A little difference today, not coming to you live from the studios. Just decided to get out of the studios, given the fact that it's a rainy season. In fact, extremely rainy day for Mumbai. In fact, it has been a very rainy weekend for Mumbai as well. So decided to come to you out of the studios. But given the fact that the cues are pretty solid, we are poised for a very strong open, given the fact that the GIFT Nifty is also hinting at an over 200-point gap up for our markets. And there are, a lot of news flow because of which, of course, we are seeing such a good cues when it comes to the GIFT Nifty. Let's see whether or not we can reclaim those 24,900, 24,950 kind of mark today as well. And that would lead the way for 25,000 on the Nifty as well. Lots of cues to digest, right? There's a GST reform that, of course, the PM has promised by Diwali. We are looking at a two slab structure now, 5% and 18%. So 28% will be done away with. And just a few sins, goods will be falling under the 40% GST rate, purview. But yes, good news for auto sector that has been batting for lower GST. Cement sector also, and even consumer durables. A lot of daily items will also get cheaper. But of course, the GOM group of ministers will deliberate on the changes later this week, so that will be a cue to watch out for. But we did see the Nifty snapping out of a 6 week losing streak as well, right? So, stage is set for a good opening. But, of course, we will focus in on the stocks that will be in focus as well today. And, of course, your stock related queries will also be taken up during the course of the show. So keep them coming in. We will try and get them addressed as well. But, of course, before we move any further, quickly take a look at the top stories at this hour. Uh, the United States is expected to proceed with imposition of additional 25% tariff on Indian goods from the 27th of August, despite recent diplomatic engagement at the Alaska summit. Sources say the sixth round of the India-US trade talks, originally scheduled for the 25th of August, has been postponed, adding further uncertainty to the already strained trade relationship. Russia launches a ballistic missile and suicide drone attack against Ukraine, killing multiple civilians. Now, this comes ahead of the Ukrainian President Zelensky's meeting with US President at the White House, which will also be attended by leaders from Britain, France, Germany, Italy, and Finland to present a united front in talks on ending Russia's war in Ukraine. The much anticipated summit between US President Donald Trump and Russian leader Vladimir Putin on Friday ended with a thud after the two leaders conceded that they had failed to reach any agreements on how to end the Russia Ukraine war. PM Modi announced the introduction of next generation GST reforms by this Diwali, aimed at reducing taxes on daily use items. Sources tell Network 18 that the center has proposed a sharp reduction in GST rates on entry level two wheelers, small cars, and hybrid passenger vehicles in a bid to simplify tax structure by addressing long standing classification issues in auto sector. And in terms of global cues, the S&P 500 ended lower on Friday after hitting record highs, while the Dow Jones also eked out a minor gain. But the Wall Street, in fact, managed to clock in back-to-back weekly gains. Asian markets were rather mixed this morning, but the GIFT Nifty, as I had mentioned at the start of the show, showing a very handsome uptick for our markets, and we are expected to perhaps even hit that 24,800, 850, or 900 mark today. All right, then, quickly taking you through a recap as to what happened on Thursday. Of course, Friday was a market holiday. We saw the market snapping out of a 6 week losing streak. Sensex, Nifty, mid cap, all of these indices gained somewhere around 1% for the week. The Nifty Bank Index did underperform relatively. It was up somewhere around 0.5% or thereabouts for the week. Pharma, that was the top sectoral gainer last week. In fact, all the sectors saw buying interest except for FMCG, which, by the way, has been seeing good traction recently. So some bit of profit taking in the FMCG index seen last week. Nearly 40 stocks on the index ended with gains. The likes of Apollo Hospital, Eternal, these are some of the top gainers on the index. You also had new age companies that did extreme. The stocks of new age companies did extremely well. The likes of Paytm, Nykaa, post numbers, and of course that regulatory overhang lifting for Paytm lifted the shares as well. So Paytm, Nykaa, these were among the top mid-cap gainers last week. Jindal Stainless, Uno Minda were some of the other names that deserve mention, which saw gains if you look at the last week price action. In terms of Thursday, we did end with a positive bias, but we came off session highs, right? Foreign investors, I want to mention that they have withdrawn as much as 21,000 crore rupees from the Indian markets just about in the first half of August. In terms of what happened on Thursday, they sold shares worth almost 1930 crore rupees in the cash market. DII buying continues with 3,900 crore rupees worth of stocks bought in the cash market on Thursday. In terms of put call ratio, the Nifty PCR fell to 1.01 vis-a-vis 1.08 in the previous session. A few stocks that will remain in the F&O band today are the likes of PG Electroplast, PNB Housing, RBL Bank, and Titagar Rail. No new additions or deletions when it comes to the F&O band list. But I think we're just about looking at the market open then. Take a look at, I think just about a few seconds to go. So yes, it is a good start, a 1.2% kind of an up move on the headline indices. Look at the mid cap index, that's up somewhere around 1% as well. The Sensex, however, is up, kind of, underperforming a little bit, just about 720 points up on the Sensex. The Nifty Bank Index also all fired up, 1% higher on the Nifty Bank Index. The advanced decline ratio at the current juncture is at 1 is to 0.15. So yeah, 1660 stocks are advancing to 250 stocks declining. So Brett also looking extremely positive. And of course, as was being expected, it's the auto pack that's leading the charge. You can see Maruti up somewhere around 6%. Remember, small cars attracted the GST of 28% earlier, plus tax. Now it will go to 18%. That's the source-based news. If it comes to 18%, that was something that the auto sector was really batting for. And the Maruti, mind you, has already been seeing pressure when it comes to the small car segment. So big booster short it would be for a Maruti, which is why the stock is up somewhere around 6%. Hero MotoCorp, a close second. For two-wheelers as well, GST rate is expected to come down to 18%. We are seeing a 4% up move on the shares of Hero MotoCorp as well. Trent is up somewhere around 3%. Nestle up 3%. M&M, so consumption and auto, a mix of these stocks are leading the charge on the Nifty. Even life insurers are up and about. There are chances that the GST rate for life insurance may come down pretty significantly. So yes, HDFC Life, that's another one that's up 2.5%. Ultratech Cement up 2.5%. GST on all these cement and etc. Of course, building materials will also come down, which is why we are seeing cement as a pocket also doing well. Bajaj Auto, SBI Life, Tata Motors, Eicher Motors, these are your other gainers. There are no laggards today, so we are looking at all the 50 stocks on the Nifty gaining. In terms of sectors, as I mentioned, it's the auto pack that's leading the charge. I want to see what the FMCG pack is doing as well. Banks also are up somewhere around 1% or thereabouts. So it's an all-round cheer because S&P has upgraded India. That happened, of course, in the market hours on Thursday. But they've also upgraded a slew of banks, I think, which is why we are seeing good traction on the Nifty Bank Index as well. Auto Index is up 4%. You have FMCG up 1.5%. Pharma, that was the big sectoral gainer last week. Some bit of profit taking, mildly lower that index. Metal is up 1.5%. Realty up 1.5%. So yes, across the board, there is strength. In fact, if you look at the Nifty Consumer Durables Index, that's also up somewhere around 3% or thereabouts. Just want to check if we have our guest joining in now or not. Rajesh Palviya of Axis Securities will be joining us shortly. I want to check if he's joined us already. Rajesh, if you can hear us. Okay, Rajesh will take some time to come, but let's talk about some of the stocks that will be in focus as well. I want to see what the Nifty India Defense Index is doing because in his Independence Day speech, the Prime Minister had also touched upon Sudarshan Chakra. Now that should keep the defense stocks also in focus today. Yes, the Nifty India Defense Index is up somewhere around a percent or thereabouts. Just recapping, what the PM said on Independence Day in terms of the reforms push and what India is doing to maintain its self-reliance. Now, PM Modi said that made in India chips will be available across the nation by year end. In fact, they are also working in a mission mode to have made in India chips. Of course, that will be rolled out by year end. They will, of course, India will also increase nuclear energy production by 10 times by 2047. And they've also launched the National Critical Minerals Mission. They've decided to set up a new task force for next gen reforms. Now, there was, a sense that reforms push from the government was slowing down a bit. But, over the weekend, we had so much news flow in terms of what the government is planning to do in terms of reforms that all those concerns have been really laid to rest. So yes, of course, we can see the rub-off impact on sectors like auto, consumer durables, even banks and life insurers. But in terms of GST, of course, the PM said that by Diwali, uh, you know, GST reforms will be rolled out. But it's the timing of the changes to GST structure that will be in focus because a lot depends. A lot of it, a lot of festive buying also depends on when this GST rollout will or the reformed GST slabs will be rolled out. Given the fact that it could see a delay in spending as well, right? So if it is rolled out much before Diwali, then of course we could see festive buying picking up pace, and of course it would also reflect in companies' earnings performances as well. In terms of the Sudarshan Chakra that I was mentioning, the PM said that they are developing Sudarshan Chakra defense system by 2035. In terms of the GST reforms, sources say that the center has sent a proposal to the group of ministers on rate rationalization. In fact, we are looking at a two-rate structure, 5% and 18%, and 40% only on sin goods, likely to be only on a select few items. Petroleum products, continue to be outside GST as per the center's proposal, and of course, inverted duty structure in sectors such as textile, fertilizer will also be addressed. Now, the GOM is expected to meet on the 20th and 21st of August to discuss the GST rationalization as well. So yes, all in all, lots happening on the reforms front, but on the trade front, the meeting that was supposed to happen between India and US, the trade talks, on the 25th of August has been postponed, has been called off for now. 20 additional 25% duty that we were looking at from the 27th of August is likely to take effect on that date itself, unless there is some kind of a push and pull or some kind of compromise that could come out perhaps out of the meeting. But so yes, on the trade front, that is something that of course will be watched out for. But in terms of global developments, lots to watch out for, right? Today we have the Zelensky and Trump meeting as well. And of course, the European leaders will also be joining in, and they would be batting for Ukraine and an end to the Russia-Ukraine war as well. Over the weekend, of course, we had Putin and the US President Trump meeting, but nothing really came out of that. But then they had decided for more talks going forward as well. So yes, that's another thing that we need to watch out for. But in terms of some of the gainers on the Nifty 500 index, then just want to see which are the stocks that are taking the lead when it comes to the broader end of the markets on the Nifty 500. Some of the movers, uh, are the likes of AstraZeneca. That's up somewhere around 1.5%. So no big moves when it comes to the broader end of the markets. No high flyers, so to say. Stocks like AstraZeneca, New India Assurance, Ratan India, Ola Electric. Uh, these are some of the stocks that are doing well. Hero MotoCorp now up 8%. But on that note, let me bring on board our guest for today. Joining me is Rajesh Palviya of Axis Securities. Rajesh, great to have you on the show. A very rainy day here in Mumbai, which is why the delay, I guess. But
Yeah.
looking at the Nifty, we have cleared the 24,900 mark, stage set for 25,000. A lot of good news, right? S&P upgrade, and then we had the whole reforms push, GST rate rationalization, uh, you know, a good breakout, and of course the levels on the upside that you'd watch out for.
Good morning. So looking at the gap up opening and now we are comfortably holding about 24,800. So I think if we continues to trade about 24,800, then I think some call unwinding activity we may see in the strike of 25,000. So if we analyze the major call concentration, which is still placed at 25,000 level. So I think if we continues to trade around this trajectory, so maybe we could see some covering in this 25,000 call writers positions, and then possibly Nifty can scale up further higher beyond 25,000 level also. So I think next half an hour is very important. Whether we able to hold 24,850, 24,900 level for next half an hour or not would decide the next course of really from here onward. Again, on the bank Nifty also 56,000, we are almost trading around those level. So looking at the data, I think here the major call concentration was at 56,000 level, but still covering action is still absent at this juncture. So I think another 15-20 minute would be important for bank Nifty also. If we see any kind of covering in those position, then possible really can extend to 56 200 300 kind of zone. But yes, the kind of announcement which we have seen in weekend, I think it's kind of sentiment booster for the market, though impact in terms of consumption demand and would be will take time, but yes, it's a kind of sentiment booster for the market. And I think if anything comes from the tariff front, I think that would be added bonus for the market to continue furthermore really. So from oversold trajectory, very strong pullback action. And I think most of the stocks which were in oversold trajectory are now showing traction. And I think a major focus is now move back to the consumption related stocks, because lowering of GST would really give them good demand going forward. So I think one can focus on FMCG, consumer durables, automobile. I think these sector
Hmm.
can do well. So from automobile, I think some of the stocks from the two-wheeler space are showing very good traction. Eicher Motor is looking very strong. I think one can look at Bajaj Auto also. These all stocks are
Hmm.
looking very promising, and I think here we could see further more traction.
Sure. You mentioned some names in the automobile pack, but what about Maruti? Small car segment, it was struggling. In fact, the company was struggling when it came to a small car segment, right? But just a few minutes ago, I saw Maruti was the top gainer, a big booster
Yeah.
because that would reduce the GST rate, and that's something that Auto Inc. was also batting for. But in terms of Maruti, which are the levels that we'll be watching out for? The uptick today, should it be used to perhaps book some profits here, or in the very short term, how would you really trade on a Maruti right now?
So almost after this gap up opening, now stock is negotiating with its October 2024 swing high, and the kind of buying interest which we are seeing even despite of this gap up opening, I think if it continues to trade above 13,600 mark, I think a possible target towards 14,000 we could see in the Maruti. So I think one can hold the position with stop loss of 13,600 at this juncture. If it continues to trade above, I think another 200 300 rupees up move could be there in this Maruti also.
Okay, expect now 200, 300 rupees kind of an up move on a stock of a Maruti, but now up somewhere around 7% or thereabouts. Of course, lot of up move on some of these counters, especially the four-wheelers and two-wheeler names when it comes to the auto pack. But let's move on and take some queries as well that viewers are sending. Viewers keep sending your queries. I can see very few queries on our feed today. Please send them. We will get Rajesh to address your queries today as well. But I think the first one I want to take up on Bajaj Finance. That stock is also up somewhere around 5% or thereabouts. Naveen wants to know his average price is 920. Wants to know whether he should hold or average or exit. Your thoughts? I think Bajaj Finance right now is at 901. So he's making some bit of a loss here. What should he do?
I think from NBFC space, we are bullish on Bajaj Finance and the way now stock managed to surpass 900 level. I think there is a breakout on the daily as well as on the weekly chart. If we analyze, I think it's almost a 2 week consolidation range breakout is taking place as the stock has shown good gap up opening. I think NBFC would also get good traction as lower GST will definitely help them to increase their business volume. And I think Bajaj Finance one can look at to buy. We are projecting target of 940 in the continuation of this pullback action. At this juncture, I think one can hold the position even in minor decline. One can add the position with stop loss of 880 and possible target 940 we may see for Bajaj Finance.
Okay, that's about Bajaj Finance. Hope that answers your query. I spotted a query on MCX on our feed. This one's coming in from Debu K. He wants to know your thoughts on how one should really be playing this stock. The stock has seen good traction, right? In the last 5 days, we saw somewhere around a 7% kind of an up move. The stock is at 8,300 or thereabouts. Last 6 months, we've seen a 50% up move, inching towards 52-week highs, pretty fast. So, any levels on the upside that one should play for?
MCX, yeah. So stock is in uptrend only, and now stock is comfortably holding about 20-day, 50-day moving average. Looking at the overall structure for MCX, I think if it continues to trade above 8,050, possible up move towards 8,400 to 8,500 we could see for MCX. So hold the position as after a correction again, stock is showing buying interest and possible up move can extend further in coming days. So 8050 should be your stop loss.
Okay, 8050, that should be a stop loss. But, since we are talking about MCX and we've taken a query from Debu K, he has a query on pharma, on a pharma stock as well. Now, since pharma has done extremely well last week, I want to get in your thoughts on a Lupin in particular. And if there's any other stock within the pharma basket that's catching your eye aside of Lupin. Uh, how should you trade into a Lupin? And within the pharma basket, would you tilt more towards hospitals, given the traction that some of those stocks have seen?
Yeah, definitely. So our focus on the healthcare segment only, and I think from that segment, Max Healthcare as well as Fortis, both stocks are looking promising. And the way these two stocks have shown good buying interest in last couple of week, we believe that healthcare space can continue further more upside. So Fortis and Max Health can be looked at this current juncture. Again, from the pharma space, Lupin is also showing sign of recovery from its corrective move and looking at the daily chart, stock managed to give breakout of its falling trend line on a falling channel breakout is already taken place in Lupin. But still, 1980, 1990 is the immediate hurdle for the stock. Once a stock crosses above those level, then I think possible upward towards 2040 we can see in this counter. So Lupin, those who have already bought should follow the strict stop loss of 1925 to hold the position.
Okay, that's about Lupin as well. Hope that answers your query. There's a query from NP Gandhi, and he wants your long-term view on a Hindware. If you track the stock, any levels that you'll be watching out for here, and if somebody already has a position, how should they navigate?
Can you repeat the name of stock?
Hindware.
Okay, okay. Uh, so I'm not able to find out the stock in my
Okay, so I
list at
think
this juncture.
okay, we'll circle
It's
back on this query in a bit, but let's move on to the next one then. We have a query from Anunay Irinki, and he wants your thoughts on Manorama Industries. He's holding on. He has positions in this particular stock, but he's not making any profit or any loss. He wants to know, should he hold on or shift to any other stock?
So stock was in corrective mode and stock has slipped below to 20-day, 50-day moving average. Looking at the long-term structure is bullish, but on the near term, some weakness or some profit taking is happening in this counter. But still, if you want to buy for positional perspective, you can hold the position or add also in decline. Your stop loss should be at around 1340. And I think till 1340 is intact, there is a possibility of up move to continue towards 1450, 1500 for Manorama industry.
Okay, that's the view on Manorama Industries. Hope that answers your query. There's a query on Ashok Leyland as well from Gitu Sandesh for the long term. How do you look at some of these companies now? We spoke about autos, but what about the CV makers in particular?
So I think Ashok Leyland is also looking bullish, and the way most of the automobile stocks have recovered in today's session, I think Ashok Leyland is also now negotiating with its previous swing high of August 2024. So I think any breakout above 135 can take this stock further higher, and then possible rally can extend to 150, 155 zone also. Overall structure is bullish for Ashok Leyland. Series of higher top, higher bottom formation is taking place. So I think one can buy and accumulate the counter even in the minor decline also. And I think on the medium term to long term perspective, this stock has potential to continue furthermore upside towards 180, 200 kind of zone also. So Ashok Leyland is looking quite strong across all time frame.
Okay, Ashok Leyland looking strong. Hope that answers your query. I want to take up a query on Idea Forge as well. This one's coming in from Vishal Dave. He wants to know if it's a good time to buy Idea Forge, given the kind of correction that the stock has seen, in the last 1 month, uh, 17, 18 odd percent. And, but in the last 5 days, it did see some bit of traction, right? Renewed buying interest, so to say, 5% up in the last five sessions. Would you advise taking a look at it? It's at 450. Room to go further up from here?
No, still trend is weak and stock is struggling to cross its 20-day moving average. I think 475, 480 is the immediate hurdle for the stock. Until these levels are not taken out, trend is likely to exhibit on the sideways consolidation or maybe on the weaker side. So any breakout above 475, 480 may attract some more buying action in this counter, and then possible breakout can take stock to towards a 525, 40 zone. But till the time this breakout is not taking place, maybe some consolidation would be there. So if your horizon is little longer, then you can buy and accumulate. On the downside, 420 should be your stop loss if you are buying and accumulating this counter.
Okay, that's the view, 420, crucial level on an Idea Forge. Okay, it's 9:37. We don't have much time. We'll try and take up a couple of more queries. I want to let's circle back to this query from NP Gandhi on Hindware. He's talking about Hindware Home Innovation Limited. Now, this stock is at somewhere around 318.8. The stock is up 15% in the last 5 days. Rajesh, if you
Okay.
could, locate that chart, we could help this gentleman with his query.
Yeah, yeah. So yes, there is a strong breakout in this counter. In the previous day also there was a very strong rally in this counter, and now stock managed to give breakout of its previous swing high. So looking at the breakout on the near term chart, some more upward momentum can be there in this counter. But if you're already holding the position, your stop loss now should be at 305. Till stock is holding above 305, there is a possibility 340 to 350 would be the next target for the stock. So after a long corrective move, there is a
I think we've lost the audio.
345 to 350 would be the next target.
345 to 350, that would be the next target on a Hindware. So finally, we managed to address your query. Hope that helps. NP Gandhi, last query to all our viewers. If you couldn't take up your queries, please send them in tomorrow as well. But one last query on the overall banking space, because two people have written in. Alex wants your thoughts on PNB versus Bank of Baroda and the overall PSU banking space. And Pooja Khanna, no, not Pooja Khanna, I beg your pardon, Kamal Makecha wants your thoughts on HDFC Bank for a fresh entry with a 6 months to 1 year perspective. How would you, or what would you advise them to do?
So, if you want to buy for short-term perspective, I think private bank are looking better compared to PSU bank. But if your horizon is for a little longer, like 3 to 6 month kind of time frame, so I think PSU banks are also giving you opportunity to buy in the correction. So most of the PSU banks are now consolidating. If we analyze on the Bank of Baroda, it's almost hovering near to its multiple supply zone, which is placed at around 348, 350, 248, 250 zone. Any breakout about 250 can take this stock higher towards 265 to 270 zone. At this juncture, 235 should be your stop loss. For PNB. Again, it's negotiating with its 20-day moving average, which is placed at around 108 kind of zone. So any move, any close above 108 can take this stock further higher to 112 to 116 also. Here also some consolidation is happening in this counter. 103 should be your stop loss. HDFC Bank, yes, you can buy and accumulate this counter, almost trading near to its all-time high trajectory. Very strong technical structure across all time frame, and we believe that outperformance is likely to be there for HDFC Bank, and possible up move towards 2100 to 2120 we may see for HDFC Bank. So one can buy and accumulate HDFC Bank. On the downside, 1960 should be your stop loss for HDFC Bank also.
Okay, that's about the overall banking space. But with that we've come to the end of the query segment. But viewers, if you could take up your queries, keep them coming in. We will try and take them up tomorrow. If we couldn't, take them up today. But Rajesh, before I let you go, recommendations in this market, which is looking extremely buoyant this morning.
So I think, as I mentioned, automobile is looking attractive. So Bajaj Auto, one can buy. A very strong breakout is taking place in this counter. So I think Bajaj Auto can extend its gain, and we may see a really extension of rally towards 9,000 level also. So Bajaj Auto is looking very attractive. From metal pack, I think Hindalco is also showing a sign of breakout on the near term chart. So Hindalco one can buy for upside target of 740, 750. Keep stop loss towards 690. Some of the stocks from life insurance, which is also looking attractive. So SBI Life, clear breakout on daily as well as on the weekly chart, almost trading above its all near term, short term moving averages. So SBI Life can also extend its gain. Another stock from consumption theme is DMart Value Avenue Supermart. Very strong breakout in this counter, and looking at the breakout, we believe that 45 50 to 4600 would be the next target. So DMart also can be looked at to buy and accumulate with stop loss of 4420.
All right, a whole host of stock recommendations from Rajesh. Rajesh, with that, I'd like to thank you for taking out time and joining in. It's a deluge outside here in Bombay, and it's a deluge of gains on the last street as well. So, no one is really complaining. And of course, we are looking to reclaim that 25,000 mark as well. So,
Yeah.
straight of good news. Thank you for joining in, Rajesh. Have a great day. And I look
Thank
forward
you.
to our next chat as well.
Thank you.
Thanks a lot. Well, at
Thank
the
you.
juncture 24,960, that's where the Nifty is at, 1.5% up. Sensex also up almost 1,000. Mid cap index, moving head to head with the benchmark indices. We are seeing a 1% uptick on the Nifty mid cap index. All the sectors, most of the sectors, trading with good gains, particularly the auto pack. You have consumer durables doing well, defense pack as a whole up 1%. So all in all, the sentiment is pretty upbeat. Of course, thanks to the reforms push that the government has announced. Of course, a two-rate structure. That's what we are looking at when it comes to GST. and something that industries, especially the auto industry, was really batting for. So a lot of these small car segments, SUVs also, some of them will fall under the 18% according to sources. If that happens, of course, from 28% that is. So that would be a big relief and would spur buying as well when it comes to the auto space. And of course, that would also perhaps spruce up festive spending if the GST reforms are announced much before Diwali. So yes, that's a positive impact that we are seeing on the market today. Also, the fact that the S&P ratings agency has upgraded India's sovereign rating after 18 years. So that's also a big positive. But on that note, let me bring on board our next guest for today. Joining me, Big Market Voice, Feroze Azeez, the Deputy CEO at Anand Rathi Wealth. Feroze, lovely to have you here. I'm out of the studio today. Good to chat with you. We are seeing good gains coming in on the last week. Of course, the reforms rush that was announced over the weekend, boding well. We have the S&P upgrade as well that I was alluding to just before you joined. So lots of good news, and that seems to be offsetting whatever negative sentiment would have been there around tariffs. Your thoughts?
Yes. See, if I look at what's been happening over the last some time, there has been a lot of pressure from the global political system and also from the tariff war. But I think what's happened is there's a lot of FI shorting which has happened. Some degree of good news will give an impetus to the market to bounce back like a spring. There's 92% short. So coming back to your pointed question, the GST reform will have a large impact. But I think what it will do to capital markets is not in the short term is to give a clear short squeeze. The short squeeze was being awaited. Every time someone asked me over the last couple of months, I've always said that the short squeeze will come back from the bad news, the similar bad news of the tariff not being as dramatic as it has been made to believe. That's point one. And second, I think we've got some degree of Independence Day gift in terms of GST reforms. So that's why you see about a 300 points move. And if the short squeeze begins, then there are three leg of short squeezes which will happen. That's the index futures short squeeze. Then you have the options short squeeze. You'll have the synthetic futures which will push the market up. I'm reasonably positive that even in the short term, we should be able to inch back to the 2024 levels of September and reach there.
Couldn't really catch the last part of your answer, some audio issue there. But would you spruce up your FY27 target for the Nifty now, given the fact that we've seen some bit of up move today on the back of the good news that was announced over the weekend?
Yeah, see, I think definitely we had anyways a target which was hard to believe just about 15, 20 days back, which was about 27,800 kind of levels for March 31st of this financial year. So that's the target we will retain. The probability of that happening has gone up dramatically. That's point one. Point two, I think, of course, give or take, these targets are not sacrosanct. But if you try and
Hmm.
look at what the fundamental values of Nifty are, if Nifty earned about 11% growth on earnings last year, of course, if you ask someone, they would say 6.5% is the earning growth, but 6.5% was not the earnings growth last year. There were four changes in Nifty. If you replace back those four changes, Nifty grew by about 11%. So if you've gone through a 10 months price correction, you've got through a time correction of about 7 8 months, 10 months, you've got 6 7% of price correction. That's point two. Point three, you have almost about 11% of earnings. So coming back to what our targets for this fiscal are, I would retain the 27,500, 28,000 kind of targets on Nifties. I think the broader market, which has been beaten down over this calendar year, should also show some respite. Last year, NSE Small Cap 250, everyone told you that the earnings have not grown, but the earnings grew by 18%. There were 63 changes in NSE Small Cap 250 is why the earnings show as minus 9%, but NSE Small Cap 250's earnings are not minus 9. If you replace back those 63 changes, it is actually plus 18%. This quarter, the quarter which went by, the small caps have not done beautifully in terms of earnings. But I think still the broader market will also show some resistance in this kind of price correction and time correction which is behind us.
Hmm. So what's the play now? Should one stick to large caps or should one look at selectively look at mid and small caps?
I personally think there is a reasonable equilibrium between the three markets. I wouldn't be able to say this when this calendar year started, but I think that
Hmm.
there's almost no positive bias to either of these segments. If I have to be a little more positive, then it would be to the mid cap segment. Mid cap, by which I mean there's several mid cap indices. To simplify life, we look at Nifty Mid Cap 150, which is what is the Bible for fund managers. So that has an earning potential of almost about 22% for the subsequent financial year as well. So I personally think that Nifty Mid Cap 150, if you ask me one out of these three, I would certainly say mid cap, but there's a reasonable amount of equilibrium on all these segments.
Right. Okay. And what about the pockets, the themes to look at now? Which are the couple of themes that would drive, gains going forward? And if investors are looking to, kind of rotate out of certain pockets and get into certain pockets, how should one really rebalance portfolio now? Now, would you look at autos, consumer durables, consumption? Is that the theme to be in?
See, I think if I have to play a structure of about 2 3 years kind of nifty outperformance, I've been betting on IT. Of course, every time I bet on IT, it goes down a couple more percent. But I think that's where the reversal is possible. So it'll be a contrarian bet. But I think auto has had about degrowth in terms of earnings last year. I think this year it has done the last quarter. Nifty Auto has delivered plus 2.6%. I think the earnings revival will happen on the Nifty Auto bit. And Nifty Auto and Nifty IT have the potential to beat Nifty by about 5% compounded over the next 3 years. That's what one investor should look at. Now, coming back to what are the themes I've been pointing out, Nifty Capital Markets, which is, I think, the theme where there is under penetration of the capital market infrastructure in Nifty. For example, Nifty has zero capital market stocks in it. I think a country, if it's trying to play an economy, I personally think if you're bullish on India, I think you have to be bullish on capital markets, and capital markets is completely underrepresented in the Indian capital markets. Ironically, sounds like an oxymoron, but that's the fact. So I would bet on those 15 stocks, which are called the Motilal Oswal Nifty Capital Market Index. And I think that there are some heavyweights there. If some more capital market stock get listed, you will have a broader theme to play. Of course, I have to give my disclaimer that Anand Rathi Wealth Limited, which is the company I work for, is also a part of that index with about 3% weight.
So, capital market theme as it is a broad theme, right? So, there's exchange, there's depository, there's AMCs. Would you play it through AMCs, given the fact that seen a very good bump up in equity inflows, SIPs at record flows? Which are the pockets that are still, under, in fact, there are a little undervalued within the capital market theme?
See, I think within the capital markets, there is a distribution business or the delivery business, B2C businesses. There are B2B businesses like the asset management companies. There is also infrastructure, financial services infrastructure. These, if you break them down, and then you have the exchanges, which is also part of infrastructure. But I think if you ask me, where would I be more specifically bullish? I think I'm actually bullish on the entire value chain. Because if an asset management company gets more business, there's also a distributor making more commission. They're very closely intertwined. If you ask me to choose one, I'll say the financial services infrastructure business would be a subsector to play in that sector which we're speaking about.
Sure. There's another pocket that has seen renewed buying interest, and that's the entire new age basket, right? We saw numbers also pretty good for Paytm and Nykaa, etc. And recently Swiggy has increased the platform fee as well, and that comes ahead of the festive season. And of course, chances are that rivals like Eternal will follow suit. Uh, any thoughts on the entire new age pocket? Is it a good time to look at some of these names, given the fact that most of them
Yes.
are on profitability path as well, as in they have already turned profitable?
Yes. So I personally look at these new age businesses which have just got into profits very differently because I tested an hypothesis. What end up happening in these businesses is if you're buying these businesses, fundamentals is not what I'm looking at. What has actually happened is these big businesses have got into indices, first step. When they get into indices, a lot of money comes in. If, like you mentioned, a couple of stocks which actually have gone into Nifty as well. If a stock gets into Nifty with about a 2% weight, what happens is there's about 8 lakh crores in Nifty index funds. So you have almost 16,000 crores chasing that stock. Once that happens, I'm just explaining to you what the cycle is, how it's a self-fulfilling prophecy. So point one, these big businesses, when they get listed, exchanges review their indices, constituents, they come into index, there's a lot of passive fund buying. Then the trader jumps in because he sees all the resistance is broken, flag patterns and all that. And then the trader comes in. Once the trader comes in, the investor says, oh my God, have I missed out something? Then the research reports are written in retrospect, justifying those astronomical valuations, which are in hundreds of P. This is the exact cycle in which these businesses are. If you want to play these businesses, you don't get too attached to the fundamentals because these businesses have turned positive. Also, in terms of profits, they've also gone back into negative. So, if you don't understand the demand and supply of passive and the trader, being an investor in these is, I think, chasing your own tail kind of business. I would say new age businesses are more supply and demand driven with these three pockets of individual mutually exclusive characteristics of these owners who actually come one at a time and take the business where it has actually gone in terms of valuations. So don't be
Hmm.
too possessive about the fundamentals. I don't believe those fundamentals, even if a report is written which justifies those fundamentals. That's retrospective thinking to my mind rather than prospective.
All right, that was a very comprehensive explanation and a good one at that, Feroze. But how would you be looking at some of these banking names now? Within the BFSI space, would you tilt more towards insurance and NBFCs, or would you look at banks? Because of course, we've seen a 100 basis point rate cut by the RBI in the last 1 year. Margins were a concern, and that's what we saw in the quarter gone by as well. So tactically, what should be the play when it comes to BFSI?
You see, BFSI, if you're doing medium term,
Hmm.
then you can get into insurance and NBFCs and stuff. But if you're looking at long term, I would say the conventional private sector banks are one of the least valuations from where they poised. Of course, we've had 2 years of very difficult times for a bank when repo rates were not touched at all, and RBI tested everyone's patience after June 22. We had an upward rate cycle, and we've got some relief in February. But I think banking is something which I would definitely vouch for from a 2 to 3 year perspective. Private sector banks, not even PSU banks, but I would say if you're playing the short term, I think banks will still disappoint you for a couple of more quarters.
Okay, banks will disappoint perhaps in the short term. But lastly, Firoz, what do you see as a risk now at this juncture? There was chatter that your reforms push had slowed down, and of course that was laid to rest by the PM himself. Anything that would look as a serious threat now, because tariff flip-flops are happening. Negotiations are on, although the 25th August talks have been postponed, so we are staring at a 50% tariff starting from the 27th of August. But how big a risk is that? Do you think the market has taken that in its stride? Because 50%, give or take, may not stay, right? Because that won't be beneficial for US as well. So here on, any big threats or risks that you see aside of tariffs for the market?
Yes, of course, I see one risk, which is a structural risk. How would Fed roll down its balance sheet? That's
Hmm.
what is going to impact the emerging market flows from index funds as well. Today, FIs, the discretionary FIs have sold, the prop FIs have sold partially, the index fund FIs have bought over the last 2 3 years. So one risk which I see is the Fed reducing its balance sheet. If it actually it can't do QE tapering, QT. Point one and point two is if they hold their current balance sheet for 6.5 years, also their balance sheet size reduces to half because that's the modified duration the Fed is running in its balance sheet. So I would be very keen to see 1.5 years how is Fed trying to manage the balance between inflation, interest rates, and their balance sheet target of coming down. So I think that's where the large structural risk lies to all emerging markets. And I don't see tariff as a risk at all. And that's what I've been stating. If Trump tried his
Hmm.
best to create some degree of panic in Indian capital markets, he couldn't do it. 2 3% move
Hmm.
down. He was expecting a 10% gap down with these statements to put pressure on us, but that didn't work because FIs have already sold. We've seen about 5 lakh crores of outflow. The Indian domestic guys have bought in about 15 lakh crores over the last 4 financial years. And in my opinion, in the next 8 years, you will see 50 lakh crores of inflow from domestic institutions. So So index fund investors of FIIs will keep buying. So coming back to the point you made, what are the risks? The whole inflation, interest rate, and balance sheet balance is the one thing. If that goes wrong, there is going to be some more outflows from the emerging markets, and that's the risk I see, which can put pressure on most of these markets over the next 1 2 years.
All right, that's the view then. Of course, Trump, of course, tried his best to create panic in the Indian market. Good point there, Feroze. Of course, he wasn't able to do that. And of course, we've had the government, of course, announcing the reforms rush in terms of GST rationalization that the market, that comes as music to the ears for the market as well. But with that, Feroze, always a pleasure chatting with you. And hopefully, we'll be chatting again soon. But wish you a great day and a great week ahead as well.
Likewise, have a wonderful day.
Thank you. Well, then, take a look at the market. We have cleared the 25,000 mark, by the way, on the upside, 25,022. That is the swing high when it comes to the market. 25,022. Yes. So we are up around 1.5% on the Nifty, on the Sensex as well. It's a 1,000 point move that we are seeing on the Sensex. Just checking the levels, it's at somewhere around 81,700, round about that level. It's an 1,100 point rally on the Nifty as well. The mid cap and small cap indices are also upbeat in excess of 1% gains coming in on those indices, and advanced decline ratio well in favor of gainers as well. So yes, things looking extremely buoyant. And Rajesh was mentioning that in the first hour of trade will be crucial, but we managed to hold on to those gains, opening gains for the first hour at least. Let's hope the momentum continues. It's the auto pack that's leading the charge with the likes of Hero, Maruti, Bajaj Auto, Eicher Motors, all of them, in top gear. Aside of that, you also have some of these consumption names doing well, the likes of Nestle, even cement is doing well, Ultratech Cement, some of the banking names like IndusInd Bank in the green as well, Shriram Finance, Bajaj Finance also doing well. On that sanguine and buoyant note, we'll leave you for now. Of course, we'll be joining you back at 3:30 p.m. with closing bell. Don't forget to tune in for that. Till then, have a great trading day. And of course, stay tuned to Money Control for all your other news and updates. I'll see you at 3:30 p.m. with Yatin. Don't forget to tune in then. Thank you for watching.